Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month nickel, zinc and tin.
LME 3-month nickel. Okay, so just to remind you once more, I have said repeatedly in this commentary for months and months that the most significant feature of this market has been the key lows of 2021 at 15,665, which led to the lows of late November 23, plus the lows in 24, most recently in late October, November and early December, and I suppose also the congestion in January and February this year. And also where we are now. I'd also add that for many months I had also highlighted the 15,840 level along with the low for 2021 at 15,665 as being still key. So 15,665 has next to it the flatlining mauve medium moving average, currently 15,680, and nearby the green declining short medium moving average, currently 15,625. Above these we have the dark blue July 24 to November 25 head and shoulders top neckline, currently at 16,020, and the gold long moving average, currently at 15,980. Altogether some pretty heavy duty resistances. Meanwhile below the market we have the 50% Fibonacci line for 2025 at 15,325, which acted as a base of action as recently as 5 weeks ago, though it was pierced last week and did delve, and I will delve into this further shortly, as well as some distance below the November 2020 low at 14,935, which helped halt the decline last week, along with the 38.2% Fibonacci line for 2025 at 14,980, plus the bright red middle time, currently at 14,790 of the early October 24 to mid-March 25 bearish shift pitch hawk, though this is now departing lower, and thus is not reinforcing the November 2020 low that well. Interestingly, this middle time even now is still not validated, but the lower time, currently at 13,510, helped halt the fall 8 weeks ago on a closing basis, and arguably also partially on a low market basis, along with the October 2020 low at 14,040. So I will take the pitchfork pattern overall as having some integrity. Some while back this led me to contemplating whether the action since at least March to date and possibly as far back as November 24 to date is a diving board pattern, a pattern that has a bullish recovery and reversal back upwards after a sharp drop. 6 weeks ago this looked like a good idea, but not so much today, and at most I would say it's a V bottom with a partial bullish diving board pattern in there. You see, we have seen hesitation ahead of the 16,000 to 16,780 area. Enough that from mid-April to date, I saw we could have a possible double top pattern, even Eve type. However, I am relenting on this idea somewhat now. You see, we have last week reached and breached the neckline for this pattern down in the 15,200 level. And that's just below the 50% Fibonacci line for 2025. And as I said last week, and I quote, you would need confirmed consecutive closes below this level to contemplate the downside. But whilst I cannot set targets below, I can indicate potentials. Thus, a primary potential after a confirmed break lower would be down in the 14,835 zone. So not too far, whilst the secondary potential lower would be down in the 14,380 zone. I say again, these are just potentials, but ones that might come about as targets if a move lower happens, and this is the key bit, if a move lower happens before I get a chance to commit next time. End of quote. Well, we have not had a suitable move lower. We haven't had the closes. Despite the break lower, so I am considering retiring this idea for next week possibly. We'll see. LME 3-month zinc. Much like LME aluminium, there had been here a number of patterns affecting the market in recent times, all happening all at the same time. The first is a thoroughly broken, but even now still refusing to die, old dark blue May to August 23 bullish shift pitch fork that subsequently acted as an August 23 to April 24 bull channel, especially the upper and middle tines. This one will still not die, even when I thought 8 weeks ago that it had finally expired. It is still nevertheless influencing the market, especially the dark blue lower tinies, which is currently at 26.50, along with the March 21 low at 26.27. Last week I also finished the recently drawn bright green mid-December 24 to mid-March this year bearish Andrews pitchfork into a shallower bearish shift pitchfork, as I think this better captures the milder bearish nature of the market better. Prices right now are once more just above the middle time there below, which is currently at 26.64. So what else have we to look out for? Well, further down we have the low of March 21 at 26.27 and the congestion at 26.01, plus from early August last year congestion at 25.49, 25.59, 25.63, as well as the important low, 2021 low at 25.47 that prompted those lows in August in the first place. So far, these have been a base for this market and have given ammunition to its recent attempts higher. Meanwhile, topside, I'd keep an eye upon the declining green short medium moving average currently at 27.22 and also the mauve medium moving average currently 27.83, plus in between them what I suspect may be a key level, the 50% Fibonacci line for the whole March to April move at 27.55. Now this is not the whole of the 2025 action, just the whole of the major move in the last few weeks. So we are finally left with a choice on the interpretation of what the whole late March today drop and hesitation might be. So is it a basing action for a possible future attempt higher? Back up to the broken dark blue upper time, currently at 29.80. Or is it a hesitation? A somewhat large hesitation, with potential down to the 23.10 zone. Right now it's not easy to say which, but I would keep an eye on the following: the bright green bearish shift pitchfork, the short medium and medium moving averages, and the 50% Fibonacci line in between them. They all may possibly give a clue to the future. LME 3-month tin. Okay, so the big picture here is no longer centered around the late September 24 to late March 25 bearish Andrews pitchfork. This has now been retired. Nor is it based around the more recent late November 24 to mid-April this year bullish Andrews pitchfork. This has likewise disappeared. The dark blue bullish shift pitchfork, on the other hand, for the same move, still has a life, with the market a little above the lower time, currently at 29.585. As in some of the other metals I've discussed here, there are a number of patterns here affecting the market all at the same time. Looking here, Monday 8 weeks ago, the market halted right on what was then the now retired broken lower time of the November 23 to November 24 bullish shift pitchfork. It bounced back up for a day, but then eight Wednesdays ago plunged further down, all the way to just below the July 2011 high at 29.005. On the way down, it passed through the now flatlining gold long moving average, currently at 31.515, and the mauve medium moving average, currently 32.205, closing below both before turning back up again for just a day in the middle of April and then dropping back down once more, though this time not so far. Just to the combination of the 50% Fibonacci line for the March 23 to April 24 move, which is at 30.010, plus the bright red neckline extension. That's currently at 30.180 of the October 23 to January 24 reverse head and shoulders bottom. And piercing, though not breaking, the now retired lower time of the late November 24 to early April 25 bullish pitchfork. At that point, the market turned higher, reaching up to the broken lower time and saw for a while prices trail along the underside till 2 weeks ago. Interestingly, 3 weeks ago, the market moved just over the purple neckline extension, currently at 32.540 of the April 24 to of the actual April 24 head and shoulders continuation pattern, but failed to stabilize over it. And last week, prices dropped back down to the bright red neckline extension. So, the overall picture last week was whether the recovery was part of a straightforward recovery, or would it perhaps become part of a bearish halfway hesitation in the making? 2 weeks ago and even early last week, it looked, as I said 2 weeks ago, and I quote, right now it seems the market is slowly eating its way higher with the green short medium moving average and the broken lower time the cap on any rises, end of quote. And that proved to be the case in that the cap exhausted all the appetite of the raises and will once more drop down to the bright red neckline. And we come to what I have said earlier is the whole early April to date action, a possible bearish halfway hesitation. Elsewhere, I would say it would become a distinct possibility. But here, on this market, well, this bright red neckline extension is bothering me by its ability to hold up prices.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.